What does this inflation print, and as you suggest, you'll be watching out until February 2022, mean for the Federal Reserve? Any taper signs potentially pushed out until February 2022, or do you expect something earlier?
No, I do think that the Fed will basically look through these base effects. So I think their assumption about inflation has so far been broadly proven right. And so taper remains on track. So Powell told us that taper will, they will talk or announce tapering sometime this year. Our base case remains that it's either going to be announced in either November or December FOMC meetings, which means that it will commence either in December or January, with a slight bias towards the January, outcome where tapering begins from January. The other thing to keep in mind here, though, is that tapering isn't really a market driving issue anymore. I mean, when you think about asset purchases and how these affect equities, it's really through the signaling mechanism that they have the biggest impact. And if you believe that, then the impact of tapering should be felt most when the Fed is starting to talk about tapering rather than when it's basically close to announcing or commencing tapering. And this is the experience we had in 2013, where most of the impact was felt in the very initial parts of when they started talking about tapering. If you hold that view, then basically most of that pricing has already happened. And now we're just waiting for the Fed to announce and get started with tapering. The rate policy is much more important, though.
All right, you're still constructive on equities, particularly in Asia. What about that weak China data that we got today? Those retail sales numbers missing by a country mile.
Yeah, so this is something that we're dealing with right now, that we are seeing a very significant soft patch in data. And this is a combination of basically the spillovers from regulations that we've seen in China over the last couple of months. That's affecting consumption sentiment a little bit. It's affecting investment sentiment a little bit from the private sector. And we are seeing obviously pretty much a global COVID wave, which has affected both services activity as well as supply chains in terms of goods. So there's been a pretty broad-based slowdown in data. And if you look at our nowcasters for GDP on a global basis, it slipped quite sharply over the last few weeks. Looking at the China data in particular, I think the most important one remains retail sales, where we do expect that these spillovers from regulation will continue to affect that number for the next several months. But today's number, I do think that the market was already quite pessimistic about it. So you can see that right after the data was released, market actually started to recover there.